Welcome back guys to another Zero DTE video, and today Ernie's going to be talking about the role of market volatility on spreads, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy guys.
Now, let me explain a little bit about the difference between narrow and wider butterflies, because in the beginning of any given day on a zero DTE day, there's a stark difference, although it's not as easy to see here in a low volatility time, but there is a stark difference in the way they generally behave. Narrower flies tend to be slower to inflate their value than wider flies. And to show you that, I did a study during a higher volatility time to illustrate this. And I want to show you that so that you can gain some understanding. Now, when I did this study, and the study is actually this little table here, and these charts are graphing the results. When I did this study, the volatility at the time was, I think, in the 26 to 27 on the VIX range. So significantly higher than it is now. And what I wanted to see was what was the difference between a narrow fly and a wider fly, and how the premium would grow at various times in the day. So across the top, you'll see I'm looking at different width flies from 10 all the way up to 35. This is all on the SPX. And then on the y-axis, I'm taking a measurement at half-hour increments throughout the day. And what I'm doing is I am measuring the value of the butterfly right at the center strike. Now, during high volatility times, you can see that narrow flies hardly have any value. And these are the size of the flies that we're trading now, right? But during high volatility times, they hardly have any value. And I'm sure if you were to look at these flies tomorrow morning, you would see that this isn't true. Even a 10 fly will already have value at that center strike, right? So that's showing you the difference between high volatility times and low volatility times. But you'll see that during these high volatility times, or this is really Goldilocks time, middle of the road, lower end flies don't start getting going until like almost noontime, where the higher width flies tend to already have substantial premium or value in those flies. Now, if I were to do the same study now, you would see that this whole chart would be shifted to the left, and you would find that even a 10 wide fly at 930 already has value. It's not at zero. Hopefully this is making a little sense here. Man, I could probably go into a 10 wide fly right now and see that it has value, which would be unheard of during this type of VIX environment that I took this study in. It would be absolutely flat. But just as an example, I'll just open up a 10 wide fly on the ES. All right, so here's a 10 wide fly, and you can see that it definitely has value right at the center strikes. We're not even close to the market right now, but you can see that it has $31 right here. Now, let's compare the same 10 wide fly at 9:30 in the morning, say Monday morning, what that would look like in a higher VIX environment. That's what this study represents. That same 10 wide fly has zero value. In fact, it didn't even start getting value until 1 o'clock in the afternoon. So back then, with a higher VIX than what we have now, those narrow flies have no value in the morning, never mind the night before.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks guys.